And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. It's Wednesday, February the 2nd, Groundhog Day. Apparently, Punxsutawney Phil saw his shadow and is announcing that there will be 6 more weeks of winter, and we're getting a big pile of it here in the Chicago area. This morning, woke up to about 8 inches. I double-checked everything with Chicago Lacey. She's very excited about it. She was having a blast, so she's also agreeing with Punxsutawney Phil that there will be 6 more weeks of winter. A little bit of a chill from our ADP numbers this morning. As far as economic numbers this morning, ADP numbers, they were looking for a positive 203,000. It came out negative 301,000 as far as job creation, according to ADP, private payrolls. We're still waiting for 9:30, the EIA Petroleum Status Report this morning. So we're going to be looking for, as always, we're going to try and put the markets in context to give us the opportunities to risk management, to manage risk, and stay patient. You guys probably get tired of hearing me say that, but it is so important. This morning, news, on traders' minds, U.S. stocks set to continue higher after Google or Alphabet's earnings smashed expectations yesterday. We're looking to see Facebook or Meta, whichever you want to call it. That's going to be up next for the big one after the close today. A pretty long list of earnings today. AbbVie, Waste Management, and Sony already out this morning. Of course, Facebook, Qualcomm, MetLife, and Aflac after the close. OPEC is supposed to be meeting today, tomorrow. Likely going to be a disappointment to those that are looking for a greater supply. Last night, the API announced a draw of 1.6 million barrels. EIA, pretty much the opposite, looking for a boost of 1.3 million barrels today with the 9:30 numbers. So a little conflicting information there. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel. You can get notifications when we do go live. Everybody be cool this morning. Rumor has it my mom's watching. Taking a look at the VIX, the Dixie, and the 10-year yield this morning. VIX down about 2%, down almost near that 20 level at 21.53. Dollar index off about 0.5%, 95.84, and the 10-year yield steady as it was yesterday. It's at 1.78%. I got to say good morning, everybody. Brody, first one in the room. You win the prize this morning. Theo, good morning. Jeff Martin, Shaw, good morning. Zarain, Jim, Terry, Brian, Chris, good morning. David, good vibes to you as well. Robert, good to see you. Scott saw and he conquered. Good morning. Charles, Ryan, Taurus Trader, good morning. Good morning all. Very nice. You're up and at 'em here this morning early, and now I lost my spot. Bill Foley, good morning from San Francisco. I get you're not getting snow there today. Romaine, first time here. Heard about us from Brian Beamish, our good friend Mr. Beamish. Welcome, Romaine. We're going to see if we can't amaze you this morning with our market acumen. Lacey is here saying good morning, everybody. Got to give her a pat. Janus, Vince, good to see you. Kevin, Frederico, Bill, George, Andre, Galen, Keith Fixit, Louis, Three Lions Insight, Michael H., Johnny Baracco, Spencer Rhodes, Alessandro, Jay, good morning. Sounds like a cardigan day, yeah. Yeah, it probably will be at some point. We got a lot of shoveling to do out there at some point today. Thank goodness my handsome, strapping 22-year-old son is here today, so we're going to see if we can't knock that out at sometime. Hey, there he is. Hey, good morning. Hey, Luke is saying good morning. Hey, JD, good morning. Dave, when? There's my guy. Jerry is awake. Hope I am too. Omar, good morning. Bron, good morning. Robert, Charles Devant, good morning to all the Hogans. Yeah, I got Mom, I got Luke. Usually we got my brother here, but apparently he's sleeping in this morning. I don't think they got the same snow we got up in Wisconsin. It was kind of right here and south, and boy, it is still coming down. Just like I said, a heaping pile of winter coming at us. So I guess it's our turn. We had the East Coast last week. We got this week is us, and it's going to be heading back to the East Coast, but apparently, not so much on the coast. So hopefully they'll get a break. Speaking of breaks, we had the equities, pretty ensconced to the upside. We had a little bit of a pullback when that ADP number came out. I don't think it's going to be anything that's going to really put enough to put a kibosh on the rally that we've seen all week. Some concerns about it. We keep losing open interest. We're not bringing business in. We're not creating new contracts. We're evaporating old contracts. Seems like we really got short at those lows in that consolidation that we had last week. Very wide consolidation, but consolidation nonetheless. And boy, it certainly seems like we really got short. We've had, initial buying all the way up all week here. Yesterday, another late spike. Why don't we, Bron's in Milwaukee, you got no snow. Well, you're lucky this time. We haven't missed it. And David, Mom? David says hi. All right. Let's jump into the charts here and see what we're seeing. If this is your first trip to the market forecast, welcome. We're glad you're here. We are all working towards your success, and we look forward to seeing that. So let's take a look. All right. And we'll get a view here of the E-mini S&Ps first, and we'll watch the open in crude oil. Got a pretty good gap there in the crude oil. It's going to be a challenging trading day, as it is just about every day in these markets. Here's the S&Ps. Here's Monday, Tuesday, Wednesday. Late spike on Friday, late spike on Monday, late spike on Tuesday. Look like we're going to be opening with a gap here. The thing that concerns me is we're not really bringing in a huge volume. Even the New York Stock Exchange has been losing volume this week, which is a bit of concern. When we're looking at the auction process, we can see that the market is attempting to go higher, but how good of a job is it doing in that direction? Is it attracting more business, or is it evaporating business? So far, this move to the upside has failed to impress as far as bringing open interest into the market. We lost approximately 42,000 more in open interest yesterday. Monday, let me see here, we lost about 54,000. So between yesterday and Monday, we lost about 100,000 in open interest. Bang, bang. This isn't money coming in. This is money coming out. Boy, I guess we really probably got too short here. And where we are today, this weekly kickoff level is a level that I calculate not necessarily to try and envelop the week's range or anything like that. We're back at a level where I think we may chase people, longer time frame traders, back into the market to need to or have to adjust inventory in bigger ways. So we may see that today. If they do not adjust to new longs above this level, they could very easily create a resistance area here, and we could see the market pull back a little bit. If we accept above this weekly kickoff level, that may indicate a situation where we've gotten out of a whole lot of shorts, which does take buying power away from the marketplace. It's going to take new participants. It's going to take new business to accept and continue this move to the upside. Is the money out there? Is it available? Of course it is. There's tons of money out there. We're not handing it out the way they were the last year, but there's still tons of money in the sidelines looking for opportunities, of course. So we got the weekly kickoff in play. We've seen open interest losing all week. We need new business. We've got a late spike. Okay, I'm calling the base of the late spike here 45.15. The late spike started a little bit early, but it never really had time to find acceptance. So we're going to call that the base of that late spike, where the breakout of the previous day's range, where it broke out from. So we got a long late spike. We also have a gap open. We have a weekly kickoff high in play. We have overnight long inventory. In other words, we've got some shorter time frame longs in this market. If they don't get what we're looking for, and that's new business pushing the market above weekly kickoff high and creating a situation where the longer time frame will need to adjust inventory, then we may see this market pull back at the very least to where the market opened last night, which is about right here. So it's not a huge inventory. You can see what happened when the ADP number came out at 7:15. We came off those highs. We had been putting in consistent highs. We've come off that a little bit. So we're looking at the nuances at hand right here. We have a late spike. We are opening above a late spike, creating a gap. The gap rules say if we can't close the gap relatively early, we trade in the direction of the gap, which would have us looking to the long side. If we do get back into yesterday's range and the late spike, the opportunity for us to be patient to look for longs, perhaps at the spike base, might be something that could be of benefit to us. If we do get back into range and accept, you may be able to catch the move past settlement down to the base of the late spike. We've taken, again, with the activity that we've seen over the last 2 days with open interest dropping, we're taking buying power away from the market. In other words, all the shorts that have gotten out over the past couple of days are no longer required to do so to flatten up. So we've taken a lot of initiating buying because shorts were losing all their money out of the marketplace. What's next? We need new business to continue this move to the upside. Let's see what's going on with crude oil, and we'll see the opening range here. So I've been somewhat complaining because volume has not been all that great. The open interest, which we had since the beginning of the year, we had a big boost in open interest. Just about every day we were adding open interest. That has begun to now waffle. We lost 6,000 in open interest yesterday. Now we're looking at a situation, we're kind of watching last week's high as a potential go, no-go level. We're opening above it. We're opening with a gap. We're opening, again, losing open interest. A lot of open interest on the way up, starting to waffle. Volume starting to waffle. Let's see the 30-minute chart here. And then we'll watch the open and watch the opening range. So no real overnight inventory until 6:30 when something got into this market. It was almost like there was some news with OPEC perhaps. I haven't had the opportunity to really fish out what happened yesterday. Put in the high at last week's high, resistant. Now we're coming at it from the other side. We may see this level here, last week's high, become somewhat supportive. Although we do know that we are opening with a gap. It is a mathematical certainty because we've already opened and we've created this gap. Let's see what happens. Remember, gap rules. If we can't close the gap relatively early, we're looking to go in the direction of the gap, which would have us looking for longs. Here is our opening range, just about to finish, about 5-6 seconds here. 46 to 32, a relatively large opening range, 23 ticks. And we've taken out the low. We're looking for some degree of confidence to the downside here now. If you remember yesterday morning, we opened with the opening range at the high of the session. It provided a 50 or 60 tick move right off the bat, and that was it. The rest of the day, we started to push to the upside. So our gap fill would be to yesterday's high, which is precisely data box. Yesterday's high, 88.87. Not a huge opportunity to come down to this gap fill. But if coming back into range and accepting could offer, more downside opportunity. Don't forget, we are waiting for EIA. All right, let's take a look at the Nasdaq then. I think the crude oil is offering a pretty good opportunity to see if we can bring in new business. We're going to see that opportunity in the equities today, it seems, as well. Volume continues to recede like the hair on my head. Open interest lower, losing 4,800 yesterday alone. Weekly kickoff high is in play in the overnight. We got within about 10 points of it, almost exactly 10 points from it. Now the employment number came out, and we've come off the highs. It sent a winter chill into that move up to that weekly kickoff high. We're still wrestling it in the S&P. We're going to be wrestling with it in the Nasdaq today. Where's the new money? That's my question. We've got a really good V bottom here, but if we don't bring in more business, if we don't create some contracts up here, if nobody's willing to buy it up here, did we take out too many shorts? Did we get long up here? All these questions and more on as the market turns. Take a look at the 30-minute chart here. Maybe there's some help for us there. After all, we are day traders. We do want to know what's going on in the longer time frame. All right. The settlement price, Nasdaq, 14,994.75. Late spike. Base of the late spike. Right about cheer. 14,952. We're going to be opening above our late spike. We've got some overnight longs. We're going to be opening with a gap. So the daytime frame nuances, much like the S&Ps, there's a lot of positives coming into the open this morning. Late spike, gap, the one stumbling block, weekly kickoff high. We need to see new business coming in up at that level to find continuation. Will we find continuation? Again, stay tuned to as the market turned. Our heroes, the S&P and Nasdaq, wrestling with the dark forces this morning. So So gap rules, can't close the gap. We're going higher. Resistance above. And gold. All right. Are we creating a bear flag here? We had two bull flags here. Didn't really amount to much. Those didn't work. Now it looks like the market is attempting to move lower, but it's losing open interest. Lost 6,900 yesterday. Volume is falling off. We're pretty much just into the week after rollover. So we should be seeing volume increasing, but it's decreasing. And it's decreasing in a bear flag, price trying to push higher, but volume being cut off. We've got a Danel here, or what we call a channel in honor of our good friend Dan. Volume and open interest just continue to get crushed here. Here's the 30-minute chart. So here's our bear flag, or our Danel, or channel, as Dan likes to say. We're testing to it right now. The market looked below it last night, but I'm focused more on what happens in the regular trading hours here. The market opened in range and in value. Probably not the best idea for us to be looking for a trade early in the session. However, it looks like we may be breaking out to the downside here. And if this does prove to be a bear flag, we may see some continuation to the downside here. At the very least, this offers us the opportunity to limit our risk. It's value low from yesterday. It's settlement. It's this trend line, which we did look below in the overnight session, but I'm more interested in what happens in the daytime session, daytime frame. This gives us a chance to look for an execution and limit our risk. Interesting. There's fish here. There's fish here for you gold traders. And I love fish. All right. What else is going on here? This is the euro. Back in a very sticky, tons of price bar overlap, range-bound, month-long bunch of garbage here. Well, we're back in it. We're back in the garbage. Volume is weak. We are adding open interest, however, off this low. We added another 700 in open interest yesterday. So the market is showing at least some promise of increase in money coming in off this low, unlike some other markets that I know. Take a look at the 30. And settlement 1/1262. Just love the fact that we went from low to high to cover this gap. Found at least a kind of rest day here, closing above the gap. We have some overnight longs in this market. We've opened with a gap. The market attempting to close the gap, but if it can't close the gap, what's our play? We're gonna look for opportunities to buy weakness, because again, we're seeing, volume has been weak, but at least we're seeing some open interest coming into this market, which, when we're looking at direction, it's attempting to go higher. Is it doing a good job? Not necessarily volume wise, but it's been adding open interest. It's bringing money into the upside. So unless we get too long, we may see this market give us a real test of the weekly kickoff high. We've got the 10-year and the nat gas left to discuss. All right. The 10-year. What are we doing? What are we doing here? I feel like Will Ferrell in Wedding Crashers. Never know what she's doing back there. What are we doing here? We're centrally located, weekly kickoff high to low, last week's high and low. We're just kind of building energy, it looks like. We're putting in higher lows, we're putting in lower highs. We've added another 47,000 in open interest on a really kind of a nothing day. There's money coming in. Direction is really difficult to try and see here. When we do get a decent move away from this area, it's likely to be a pretty decent move. You know, we've added another 100,000 in the last 2 days. Is that big for the 10-year? Maybe, maybe not. It's just encouraging that while it's range bound, it's building energy. Take a look at the 30-minute chart. All right. This morning, looking at it, early, we had some overnight longs. Well, not anymore. But we've basically spanned value since the open, put in a low at the value low, coming back to the center. I'm staying patient again in this market. I mean, this overnight inventory to the long side that we had yesterday to close the gap, to continue that move, that was something. This isn't anything. I don't see that there's enough information sitting here in the middle of value for us to do anything in the 10-year right now. The yield is exactly as it was this time yesterday. Meatloaf. So I'm not doing anything here. I don't often trade the 10-year anyway. Now let's take a look at the nat gas. I don't know why I always do that. It's on the same panel. So we're starting to get some momentum here, it looks like. 2-day bull flag. Lower high, lower low, low volume, contrary to the recent move. And we've broken out not only the bull flag, but we're above weekly kickoff high. We added 1,800 in open interest yesterday to the downside, but we didn't finish the day really down. We might see some bigger volume today. I'd like to see an increase in open interest. Not because I want to pay more for natural gas, but the trading opportunities. It's such a love-hate thing, I guess. You get the opportunities trading and you pay more for natural gas or gasoline, as the case may be. Here is the 30-minute chart. Bull flag. Overnight inventory long. Finding continuation to the upside. Big jump here. Just right over weekly kickoff high. It's all in the momentum. It's all in what happens up here. The more time we spend, when we're talking about the market profile yesterday and foundations, we talk about what marks acceptance, and as a market profile trader, it's time. The more time we spend up here, the more the market is saying, yes, I am accepting this price up here as fair. If it rejects, this could become an unfair high. But as long as we hang up here, the market is saying, yeah, I'm good with this. If we increase volume, we increase open interest. The probabilities of continuation are greater. If we don't bring in new volume up here, if we don't bring in new business by creating more open interest, that's going to say that this auction is maybe a little bit too long. We've got an unfair high up here. And if we fall back down below weekly kickoff high, we could continue to look and push lower. We could come all the way back to this trend line here without changing the upside market state. All right. Let's see what else we've got to talk about here. Echo. Okay, no echo. Right. All right, I'm just going to go bottom up here. Drawing tools on the left side of the chart for. Let's go the other direction here. Equanimous, land of infinite shovels. Yeah. Well, I would imagine there's a high demand for shovels. If you're long shovels, when it gets to 100, sell. There's some poor guy, trying to drive. Oh my goodness. I think he's stuck. This is just nasty. All right. Dr. VJ, good morning. Deanna, good morning, Deanna. That sounds like a lot of fun, Deanna. Let's let the winter get past us, and we'll see if we can't make something like that happen. Merrick, good morning. James, how do you see open interest contracts in real time? You do not. Open interest is something I've seen platforms claim that they're able to calculate open interest in real time, but there's no way that it's possible. With all the transactions and all the contracts changing hands, a platform has no idea if I'm buying a new contract or if I'm getting out of an old short. So even the exchange, it takes time for them to calculate the true open interest. If you look at the bulletin, the daily bulletin on cmegroup.com, you'll see it before about 9 o'clock. It comes out and it's preliminary. They're still calculating open interest. It's just after 9 or 9:30. If you refresh that page, then it'll say final, and then you've got your correct open interest information on there. So you can't see open interest in real time. It sounds like a great idea, but it's just nothing's impossible. I firmly believe that, but nobody's figured it out yet. Galen, how is the weekly kickoff level determined? It's market profile information, technical analysis, a little math, and experience, I guess. I keep that proprietary to myself, but partially because I don't know. There's times when they're obvious. Maybe it's just a naked point of control from a long time ago. Sometimes they're not so obvious. Measured moves sometimes come into play. Just through experience, understanding, or thinking I understand the mind of the longer time frame trader. Sometimes they're great, just like every other level or number. Sometimes they're not so great. To me, they're always important levels to be paying attention. I do trade against them or with them, depending on the situation. I created them. They're my monster. I have to love them. But again, it's a process. I usually do it on Friday after the close and just sit down, relax, take a look at what happened through the week, check out all the charts, technical analysis, profiles, all of that stuff comes into it. Crude, my old friend, yes, my hair is receding too, but grass doesn't grow on a busy street. As the market turns, our favorite soap opera, yep. Anyone know what the whole setting is they use for the 30-minute chart? Yes, Mason told you 9 and 13 on the hull. Yep. Beavis, say hello to Butthead for us. You're probably tired of hearing that. So much opportunity in Crude. Boy, you're not kidding. Yep, PD, let's get it today. Yeah, I hope you had a good day yesterday. Andrew, good morning. Thanks for sharing. Yes, of course. Hopefully you got what you were looking for. If you didn't, it's group coaching today. Again, it's going to be, a little bit late, perhaps, maybe. I'm going to put the link in so you can join. If there's a question you didn't get answered today here in the forecast, you can always join group coaching, which is every Monday and Wednesday, typically at 1 o'clock Central Time, p.m. but because of the trading foundation, we've been going a little bit long with those, so more like 1:30 tomorrow or next week. I may not be here for group coaching on Monday, but we'll resume 1 o'clock for the time being next week because Trading Foundation will be over. It's been a gas. I've really enjoyed talking to everybody and meeting everybody that I've had the opportunity to meet in Trading Foundations. The recordings are there for you to listen to on YouTube, perhaps forever, ever, 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 ever. But it's all to hopefully improve everybody's performance, and at least teach them something that they didn't know before. Perhaps there's more coming, much more content, much more education, and much more of others here at Top Step and their ideas and thoughts. So it's important to listen to everybody. And all right, time to shovel out the streets with old hollowed out acoustic guitars. Yeah, I've got to get to a couple of perhaps garage sales. You find old, cheap, beat up guitars, and I hang them in the trees. They live there. They'd probably last longer if they were migratory, but apparently they're static. So, all right, let's take our deep breath. Michael, good. I'm glad. Benjamin, good to see you. Do you ever use past week's composite profile point of control? Sometimes. If we were to do that in the S&Ps, last week's point of control isn't part of the equation. But I will look at composite profiles, especially during range-bound periods. Take our deep breath. Stay humble, grateful, and creative in your trading today. I will see you for Foundation. I will see you for group coaching. I will see you for the recap today at 3 o'clock. Get out there and profit today. Trade well. And see how things go later on. Get out there and profit. I'll see you in the proverbial trading pit in just a couple of minutes.